Good evening, Richmond and Burke counties. Welcome to the CSE Peach State Federal Credit Union Big Marker Mike House. Hey, I'm Deirdre Cox. I am president and founder of Community Sustainability Enterprise. We're a Georgia-based 501c3 with a heart for the community and a head for business. And we're pleased, Georgia Peach proud, to welcome Peach State Federal Credit Union, our client, into the Big Marker Mike House. And I am joined today by Ms. Alicia Fitz, whom I have the absolute pleasure of working with on a day-to-day basis to transform communities and move households from one level of socioeconomic growth to the next. So without further ado, I'd like to turn it over to our hostess with the mostest, Miss Alicia Fitz of Peach State Federal Credit Union. Alicia, come on in here and take this big marker mic, girl.
All right. Thank you, Deirdre, for that beautiful welcome, and we thank you for your support. We would like to first say good afternoon to everyone, and first and foremost, like to thank everyone for joining us on this afternoon for our Home Buying Experience webinar, brought to you by Peach State Federal Credit Union and Community Sustainability Enterprise. I am Alicia Fitz, Business Development Representative for Peach State Federal Credit Union. I operate in the Augusta, Georgia, and Aiken, South Carolina areas. Here at Peach State Federal Credit Union, we are committed to the financial success of our members and our community. We were founded in 1961, and we serve more than 60,000 members in Georgia and South Carolina. We offer a variety of financial products and services that are designed to fit the lives of our members. We are partnered with Member First Mortgage. Member First Mortgage is a credit union service organization that is wholly owned by 12 leading credit unions. Member First Mortgage was founded in 2001 and is headquartered in Grand Rapids, Michigan. Member First Mortgage is licensed to originate mortgage loans in more than 40 states across the country. We have with us today Mr. Jim Dymick. The Southeastern Production Manager for Member First Mortgage will be presenting a fantastic and informative presentation for our webinar attendees on tonight. Also, we will receive a wonderful and enlightening presentation from Mrs. Shadante Butler, Community Development Business Manager. She is representing Federal Home Loan Bank of Atlanta. Federal Home Loan Bank of Atlanta is a cooperative bank that offers competitively priced financing, community development grants, and other services to help member financial institutions make affordable home loans and provide economic development credit to neighborhoods and communities. And now we will welcome Mr. Jim Dymick to present to us. The floor is yours.
Thank you very much, Alicia. Thanks for the grand introduction. I hope I live up to everybody's expectations, and really looking forward to informing everybody that's thinking about purchasing a home or thinking about maybe already owns a home and wants to know more about refinancing. So without much further ado on that, let's go ahead and get started. And at any time, throughout the presentation, we'll maybe have some stops where we ask some questions to the audience and poll to see what you might want to hear from us. But in any event, we've got your mortgage basics. And on this slide right here, if you click on the mortgage glossary, this will be presentable to all of you attendees that you can actually look up what certain terms that I'm using throughout this presentation. But again, that'll all be available to you. But, just to talk a little bit about the mortgage basics first, it's, most people would really want to know what's in my monthly mortgage payment. And it's going to be principal, interest, taxes, and insurance. Principal being the amount that you borrowed, interest being the interest that we as the lender charge you to borrow those funds. Taxes, it can be the property taxes or the city taxes that would actually go in your mortgage payment. And then there's, different types of insurance. There's on a conventional loan, there's private mortgage insurance that if a borrower does not put down 20%, that goes in the payment. But also that goes in the payment is your homeowner's insurance policy. So that when you make your payment, it's taking care of your property taxes and it's taking care of your homeowner's insurance. And then should you be buying a home that's in a flood zone, then you might actually have to have flood zone insurance as well too. But again, at the back of this presentation, you'll actually have some references to all our mortgage terms. But moving along, there really are four products that we're going to focus on. It's going to be conventional loans, and we'll talk a little bit about that for a minute or two. So on most of your conventional loans, it's going to have a term from anywhere from 10, 15, 20, or 30 years for you to pay back that loan. And what it means is the interest rate is fixed for the life of the loan. Now, there are some other conventional loans that are not fixed, and those would be called adjustable rate mortgages. The rate stays the same for 3 years, 5 years, 7 years, and 10 years, but then it adjusts all the time afterwards. Conventional loan, you can use it to purchase, and you can use it to refinance up to 97% of your loan to value. What a loan to value is, for example, if someone's purchasing a $100,000 home, and if they put down 3%, then that is what we would consider a 97% loan to value. Cash out refinance on a conventional loan can go up to 80%. So for those folks out there that already own a home and are thinking about making some home improvements, you can tap into your home's equity. On second homes, you can actually do the cash out up to 75%. Next loan product is your FHA. Your FHA loan is probably the original first-time home buyer product. It's going to be typically a 15 or a 30-year fixed. It does have a credit score requirement of 640, and it is a type of loan that allows you to put just 3.5% down based on the purchase price. It does also allow for the seller to make contributions of 6%, and that's really important because a lot of times people have enough money for the down payment, but they don't have enough to pick up the closing costs. And the FHA is very tolerant of that it actually allows for the seller to contribute, most, if not all, of the closing costs. Another nice thing about the FHA as well, too, is that if you didn't have your down payment from your own funds, you can certainly have an immediate family member that can actually provide you with that down payment. But also, too, later in our presentation, we're going to hear from Federal Home Loan Bank because they have the ability to help us with purchasing a loan without having a down payment, and they can help with that. Another thing about a FHA is that it is a little bit more tolerant than a conventional loan in that you can actually take up to 85% of the home's appraised value to do a cash out. And then for your regular rate and term refinance on an FHA loan, it'll go up to 97.75% of the appraised value. And if people have not noticed recently, everybody in our industry is a little bit busy right now because the rates are so low. So if you already own that home, you might take a look at whether it's a conventional or an FHA or even the next slide, which is VA, and do a cash out. So, in your market there in the Augusta area, obviously there's a lot of military presence. And so this is another great loan product offering through Peach State. It's a VA loan. It's a 15 or a 30-year fixed rate. It's for those who are veterans who have served or are active in the military and have a certificate of eligibility. Beautiful thing about the VA loans is that you do not have a down payment. It's 100% financing. And again, so like someone using that home, they can get into it with, without having to have a down payment, and the seller can even provide all the closing costs. So, and then for those that are actually, own the home that maybe want to think about making some renovations, VA is a little bit tolerant as well too, and it'll actually go to a 90% loan to value of what the appraised value is. And it does not have any monthly private mortgage insurance or any whatsoever that goes into your monthly payment. Okay, so here's another beautiful product that would be available in your market, and that there definitely are some areas, not all, as Augusta market is growing, greatly. There are some areas that are deemed as rural. And so in a situation like that, this is another excellent program that it doesn't require a down payment. It's 100% financing. So again, it's another true zero down payment program. The seller can actually contribute most of all the closing costs if they do that. The only catch to the program is that, it has to be designated in a rural area. And it does have some certain income limits to it that apply, whereas like your conventional loan, your FHA loan, your VA loan, they don't really have any income requirements. And then, past the mortgage products, we can certainly talk about the construction loans, but, through your credit union, we do actually offer some construction loans as well, too. But also, too, going on to our next slide, at the back of this presentation, you'll notice that, we've got, everything out there for the terms that I will probably talk about, throughout this presentation. So don't worry about it. If you don't understand it right now, all these mortgage terms will be in the back of this presentation for you to look up on your own. So off into the next part of the equation here. The mortgage process is like if someone is buying a new home, they need to get pre-qualified. And so what pre-qualifying means is that you're going to contact the lender, and we are going to ask you for certain documentation to determine whether you're eligible for purchasing this home. It's basically a credit report that we're going to require if you want to get pre-approved. And then the two other portions of the pre-approval process are the gathering of the income docs, which would be your pay stubs. And then if you do have money for a down payment, then we would need to gather your bank statements or financial statements to show where the down payment money is coming from. And that's what a pre-qualification is. It's determining your credit, your income, and your down payment source. Those three things are what determine whether or not you will have an option to go conventional, FHA, or VA, or USDA. And then based on that, we will, hopefully recommend what's the best for you to, best option for you based on your criterion that you've provided us. Okay, folks, so let's talk a little bit about the mortgage process. And what we have is we have a little video put together that takes you from being pre-qualified to you finally moving into your home. So let's go ahead and play the video and just kind of show you that process.
Welcome to Member First Mortgage. In this video, we'll walk you through the steps of the mortgage process and what to expect.
Once your loan application has been submitted, a mortgage consultant will reach out to you to review your financing needs and collect loan documentation. Upon review by an underwriter, a conditional approval will be granted. Your loan processor will assist you in satisfying the underwriting conditions. It is helpful to have consistent access to your phone and email as you work with your loan origination team. Make sure to keep supporting loan documentation in a safe but handy place throughout the process. Remember that your income, assets, and other credit will be under review throughout the entire loan origination process. Avoid opening any new lines of credit or making other large purchases during this time. Doing so could adversely affect your ability to obtain a mortgage loan. An appraiser will contact you to schedule the inspection of the home. This is necessary to determine the home's value. Again, you will want to make sure you have consistent access to your phone and email to schedule this appointment promptly. Once the value of the home has been determined and all documentation collected and reviewed by underwriting, a clear to close will be issued and your mortgage consultant will contact you to schedule the loan closing. The closing appointment will require about an hour of your time to sign the final loan documentation. Then with keys in hand, you've completed the home purchase or refinance process.
Okay, thank you for watching that, folks. Appreciate that. So something else that we need to speak about is when you want to get pre-approved, first, that's the most important part, rely on your mortgage consultant to help you and guide you as to which is the best loan product for you. And once that has been determined, then, that's when we would actually really need to engage the role for your realtor. And so the realtor is going to be the agent that acts as the middleman or the broker between the two parties that are seeking to buy or sell that property. They're very knowledgeable about your local laws and your local market and the buying and the selling of the property. They know trends of what's going on in the neighborhood that you want to buy. And so it's really, really important that, once you select a realtor, word to the wise, make sure that you are working with a realtor that does their job full time. So, that they're going to represent you on your behalf because, your market in your area, it's not for the meek. It is a seller's market. So there's going to be multiple people that are competing for that property. So, and then let's discuss what's the difference between the buying agent and the listing agent. The buyer's agent is the one that's contractually bound for a length of time to help you, find that home that you want to go under contract for, and they're going to negotiate on your behalf what the purchase price is going to be. They will take you and they will help you view those properties. Although in this environment, it might be a little bit of virtual, to be brutally honest. So they're going to evaluate the neighborhoods and help you decide what is important to you, whether it's the school district, whether it's close to Publix or whatever. But based on your criteria, they're going to help you locate that property to the best of their ability. The listing agent, that's the person in the equation that actually has the home listed that you want to hopefully take a look at and possibly buy. They will work with your seller's agent to establish an appropriate sales price for the home that you are interested in. And again, they are representing the seller, whereas the buyer's agent is the one that's representing you. So, long story short, any real estate office, each agent is going to work hard to sell their company's listed properties. And so you just want to make sure that sometimes that there's not a conflict that you want to have a buyer's agent for yourself, regardless of whether or not it's sometimes there are situations where you have a listing agent and someone actually contacts the listing agent without a buyer's agent. I would avoid those types of situations because you don't really have anybody that's representing you. So, but in long story short, make sure that you have a buyer's agent to represent yourself. So. And then off to the next slides, we're going to take a look at this point, that is, it in a nutshell. And what I'm going to do now is I'm actually going to turn over the program to a representative at Federal Home Loan Bank, because they have some phenomenal offerings for folks that may not have the down payment money that they would like to have before buying a home. And so without much further ado, turn this over and we will have a discussion with Federal Home Loan Bank.
Thank you, Jim. Good evening, everyone. And I'm excited to have the opportunity to join you today to talk about some of the assistance programs. So as Jim mentioned already, there are a number of different first mortgage products out there to help home buyers. And what we offer at the Federal Home Loan Bank of Atlanta are products that work in conjunction with those first mortgages, really to help you minimize the amount that you're having to pay out of pocket to cover some of those things that Jim talked about, the down payment, the closing costs. So at Federal Home Loan Bank of Atlanta, again, we are basically a co-op. So we work with financial institutions such as Peach State Credit Union. And so these products are available through Peach State. So the application process would actually flow through them. And the first product I want to talk to you about today is our first-time homebuyer product. So this is one designed specifically to support first-time homebuyers, where you're able to access up to $5,000, again, that you can use for down payment, for closing costs. In order to qualify for that $5,000, you would have to contribute $1,000 of your own funds. But that would include some of the things that Jim talked about earlier. If you're putting in earnest money, or if you're paying for things like an appraisal during the process, or even a gift from a family member, any of those things would count towards your $1,000 contribution. So if you're able to put in at least $1,000 of your own funds into the transaction, you're able to access $5,000 from Federal Home Loan Bank of Atlanta. There are some income restrictions for these programs, and they depend on where you're purchasing the property as well as how many people live in your household. So I would definitely encourage you to follow up with the representatives from Peach State and Member First to talk more about those details. But again, we just want to make sure you're aware of some of the products that are available to support your home buying efforts. The next one we'll talk about is what we call our Community Partners product. And this is designed to help those that really serve and help others as a profession. So this product is designed to help those that work in healthcare, education, police officers, firefighters, first responders. This product, there are a couple of things you'll notice about this one. One is the home buyers are able to access a little bit more than what's available under our normal first-time homebuyer product. This one allows you to access up to $7,500, still requiring that $1,000 contribution. This one, you don't have to be a first-time home buyer in order to qualify. And I should mention for us, first-time home buyer doesn't mean that you've never owned a home. It means that you have not owned in the past 3 years. So if you have not owned a home in the past 3 years and you're purchasing now, you would qualify as a first-time home buyer under the first product that I discussed. But again, for community partners, you are not required to be a first-time home buyer. The next one is our foreclosure recovery product. And I realize that name can be a little bit confusing, to be honest with you. It's not speaking to someone that has been through the foreclosure process. This product is designed to help home buyers that may be purchasing foreclosed properties. The foreclosed properties would have to be owned by a member of FHL Bank Atlanta. So we can help you figure out exactly which financial institutions those would be. But we do have well over 800 member financial institutions, including Peach State. We also have members that are banks, other credit unions. So again, we can help you figure out who those members are. But if you happen to be purchasing a foreclosed property from any Federal Home Loan Bank of Atlanta member financial institution, you're able to access up to $15,000 to help with the purchase of that property. Again, still requiring that minimum $1,000 contribution from you, the borrower. But again, if in the right scenario, depending on the property that you're purchasing, if it is a foreclosed property, then you would qualify for up to $15,000. And these products are all limited to certain income levels. So again, definitely talk to your Peach State representatives to figure out whether you qualify. But again, in the right scenario, a pretty significant help with the down payment and being able to get up to $15,000. And we also have products available to help veterans. So Jim mentioned earlier with the VA loan, they are 100% products, meaning you don't necessarily have to put any money in for the down payment. But if you qualify for the Veterans Purchase product, you're able to get up to $7,500 for the purchase of your property. So even though a down payment may not necessarily be required from veterans, you could still use this money to help with any closing costs or any out-of-pocket expenses, or you could simply just use this money to help lower the amount of your first mortgage. So instead of getting the full loan amount, you could get $7,500 from Federal Home Loan Bank of Atlanta through Peach State and then lower your first mortgage amount. And I will also mention that if you happen to be a veteran that was deployed to some sort of military intervention overseas, maybe you served in Iraq or Afghanistan or another conflict, then you're actually able to get up to $10,000. So you can get a little bit more money if you served in some sort of overseas conflict. So, and the other added benefit for veterans is that you are not required to put in any of your own money. Whereas the other products we talked about, you have to put in at least $1,000. For veterans, there's no contribution required. So you're able to get that full $7,500 or $10,000, regardless of how much you're putting into the transaction. So that's a quick overview of the products that are available. So again, happy to have the opportunity to talk with you about these products today. I hope you will certainly follow up with your team at Peach State and Member First to explore these products in more detail. And at this time, I will turn it back over to Alicia Fitz with Peach State Credit Union.
On behalf of Peach State Federal Credit Union, we'd like to thank both of our presenters on tonight for their amazing presentation. Now we will open up the floor for questions and answers.
Welcome back. We've got some poll questions that we'd like to run past you. And then Miss Alicia is going to come back in the Big Marker Mike house, and she's going to take some Q&A. But we've got a few poll questions. So Jalen, can we get those poll questions up for our viewers and our guests? So poll question number 1, this really helps Peach State and members first identify your needs. So if you could answer this, are you or have you ever purchased a home? Yes or no? And Jim, you're out there in the world, so talk to us a little bit about the definition of a first-time home buyer. Talk to us a little bit about that.
Okay, well, thanks, Deirdre. So a first-time home buyer, it can mean just that, someone who's never owned a home before, or in the case of some of the specialty products and the specialty down payment assistance programs, it doesn't necessarily mean to have to mean someone that's actually never owned a home. In other words, if you haven't owned a home in 3 years, but you have owned a home in the past, you can qualify for some of these first-time home buyer products by Fannie Mae and Freddie Mac. And so there's a little bit about that. And, a lot of times as a first-time home buyer, some of the people that come to us, they're kind of like a deer in the headlights. And so what we would strongly encourage is for you to actually meet with, the loan officer at Peach State or whomever, and just realize that there really is no such thing as a silly question. We do this for a living. We live and breathe it. And it's just, there's no such thing as a silly question. And so, again, as a first-time home buyer, you don't have to be a first-time home buyer technically, but some programs, again, are, limited to, have you owned a home in the last 3 years? And so Fannie Mae's got the Home Ready and Home Possible, which you can use even though you've technically owned the home in the past. And they are a specialty product.
Very good. Absolutely. And I've got a question for Shadante Dozier too, while we're pulling up the next poll question. So Shadante, can you talk to us a little bit about the definition of first-time home buyer for your product at Federal Home Loan Bank, that amazing down payment assistance you have?
Absolutely. So for down payment assistance from Federal Home Loan Bank, as Jim mentioned, it's one of those programs where you don't have to be a true first-time home buyer. For us, it's a 3-year window. So if you have not owned a home in the past 3 years, by Federal Home Loan Bank definition, you are considered a first-time home buyer.
Wonderful. Awesome. And if I'm not mistaken, I think Miss Alicia Fitz, I believe you are a first-time home buyer too, aren't you, my dear?
Yes, I am.
Congratulations.
And we hope to have a lot more soon after this webinar.
Absolutely. And I believe we are, because you guys are putting some great information out there. So here's our second poll question to you all as our guest tonight. Do you have your credit monitored, or do you know your credit score? Jim, talk to us about the importance of knowing your credit score before you start the mortgage process.
Oh, that to me is an easy thing to understand. I mean, it's very, very important to know your credit before where you start. The reason for that is, as you notice, there are plenty of mortgage options out there for the consumer. And, I think it's a good idea that, hey, even if it's a year out from you purchasing a home, if you use any kind of credit monitoring service, pay attention to it. Because credit is probably one of the most important aspects of getting a loan besides having a job. Because as you've learned from this seminar, you don't even have to have a down payment with some of the down payment assistance programs out there if you qualify for it. And so as a mortgage person, I want to see people have an option to get FHA financing, possibly a conventional loan, and really have options available to them instead of just saying, hey, oh golly gosh, I'm under contract now with this realtor and I can only get this FHA loan. There's no such thing as good or bad loan products, but it's like, if you monitor your credit and kind of like plan things out for like a year in advance or, whatever, it's a good idea to know where your credit is, because it's very, very easy to improve your credit as well too. And again, Deirdre, I don't know if I can spend another minute on this. Do you mind if I talk more about this?
Sure, please do. That's why people are here. Please share. Mm-hmm.
Okay. Because what a lot of people don't realize is that, how is a credit score created? And so when we pull on our side what's called a credit tri-merge credit report, we're getting a score from Equifax, Experian, and TransUnion, which are the 3 data repositories. And they score you. And the biggest, how they score you is primarily based on how long you've established credit. If you have, say, a credit card, and that credit card, say, has a $1,000 limit. If you pay on time, which is like, say, not 30 days late, then that's good credit history. What makes the scores jump up higher, though, is like, say, for example, if you have a credit card which has a $1,000 limit, and if you're continually keeping that balance high as compared to the credit limit, so in other words, if you have a $1,000 limit and you're keeping it at $900 per month and not paying it down to a certain percentage, you're not necessarily creating bad credit, but it's going to hurt your scores. So in other words, debt utilization is extremely important with credit. So in other words, it's always ideal if you can pay your credit card off 100%. But if not, try to keep it at, or say, 20 to 30% of the available balance. But never let something go 30 days late. So in other words, if you had a June 1st payment, it's okay to pay it on June 10th. Just don't let it go to July 1st, because then it's like the creditor that issues that credit is going to report you late to these credit bureaus, and that will really impact your scores. And whether it's a mortgage or whether it's a car or whatever, the higher scores you have, the lower rates you're going to get on a mortgage or a car loan. So credit is extremely important. It's never too soon to start monitoring your credit. I'll zip it.
No, that's critically important. And that's one of the things that we love here at CSE about working with Peach State, because Peach State has a plethora. I said plethora. Yes, that would be a lot. They have a plethora of products to help individuals who are looking to grow their credit profile. And like we always talk about, Alicia, their financial capability. So we've got some of your Augusta peeps out here, Miss Alicia, that want to ask some questions. So right now, we're going to ask questions. Go ahead.
I think we had a question from Andriana. Is it a good thing to join with Peach State Federal Credit Union? No, it's not a good thing. It's a great thing to join with Peach State Federal Credit Union. And just on the subject of credit, as Jim and Deirdre was talking about, Peach State literally offers resources for members and some non-members as well. So you can check out on our website under the services tab. It's called Balanced Financial Fitness. We have debt and money management, financial coaching, and also credit report review and home buying, home ownership coaching as well. And what I'll do is put the information in the chat box as far as we can connect you with a counselor in the times where you can set you an appointment, and you can do this from your home. So we can get started now if you have the items that you need to clean up on your credit. And I am Alicia Fitz. I would be your contact in the Augusta area to get you started. And I'll also have my information as well.
Amazing.
So please keep the questions going.
So do you see Miss Boyd in there too, Miss Alicia? Do you see her question too?
I do not.
So Tierra Boyd says, does Peach State and Members First help us access credit reports and provide guidance on how to improve your credit to pre-qualify for a mortgage? And that pretty much goes into what you talked about with balance, right?
Yes. So yes, Tierra, how you doing, Tierra? Thanks for joining us. Yes, actually, if you visit, again, peachstatefcu.org, go under the services tab and click on balance. You will be able to pull a credit report. We can either have someone from our branch help you with that. But you are allowed to get one free credit report per year from annualfreecreditreport.com. And we can have someone sit down with you, walk through items that you may need to fix or get corrected now, or just get you on the pathway to get started and get those items cleaned up so that we can get your loan started with Jim and get you some down payment assistance with Shadante. So yes, we have those resources and services. And Tierra, you know where to find me. We got multiple avenues. So yes, that was a great question.
Awesome. We have another one from Miss Juanita Cody. She wants to know, Miss Alicia, do I have to have a Peach State account to get a mortgage loan, and how do I apply?
Hello, Juanita. Thank you for joining. Yes, you will need to have an account with Peach State to apply for a mortgage loan with us. And what you would do is come into our your nearest branch, your nearest Peach State branch. Again, you can connect with me, and we'll figure out which is the best branch for you to go to. And then you can literally start your mortgage loan application online. You can start that process in the comfort of your home and apply. But yes, you would need to be a member. And the same day that you join, you can do your application as well. So you don't have to wait 30 days or 60 days to apply for your mortgage. You can apply same day. Thank you for that question, Juanita.
That's awesome. So I think we're going to go back to some poll questions. Keep those Q&A questions coming. Miss Alicia wants to hear from you. So does Mr. Jim, and so does Shadante. So we'll go to the next poll question, please. Question number 3. Are you active duty in the military, or are you a veteran? Have you served your country? And if you have, and if you're currently active duty, we want to thank you for your service. But that's the question. Are you active duty now, or have you served in the military? Jim, talk to us a little bit about the property appraisal process on a VA loan, because I know that it's a little different from a VA loan versus an FHA loan, and I know I may be going into deep water here, but what does that look like?
No, I appreciate the asking that, Deirdre, because a VA appraisal is a little bit different than a standard appraisal on, say, like a conventional loan. And the VA loan really wants to serve the veterans. And same thing with the appraisal. It goes a little bit deeper than just say, hey, here's the value of your home. Is it okay? And is it appraised for the sales price? It goes much, much deeper than that. A VA appraisal is kind of like almost a mini home inspection, which is not necessarily required that you get on the home, but it's certainly advisable. So the VA appraiser is going to go ahead and double check and make sure that there's no safety or health related issues with the home. And so in other words, it gives you a value, but they're going to make sure, like say, for example, if there's a deck and there's some railing back on the deck that is loose that could cause some harm to the veteran or whatever, it's like, it's okay. So if the appraiser makes that comment on the appraisal, the seller has to fix it. So it's a combination of giving a value to the property, but it also has some additional safeguards in that actually protects the veteran so that they're not getting into a situation that really could cause them some harm with maybe, say, an electrical outlet that's wired up bad or a roof that is leaking or stuff like that. You know, because every house has a value, but a VA appraisal just takes it a little bit step further to protecting the veteran.
So I've got another question for VA. So you told us that there's no money down as long as you are eligible. Can you talk to us a little bit about eligibility as it relates to that certificate of eligibility? What makes you 100% or gives you 100% loan to value or no down payment? How long do you have to serve in the military to be eligible?
Well, as far as like the length of time that you have to serve in the military, I don't know the exact answer to that, but it's like, you know, typically you're going to get your certificate of eligibility, and it's going to show on that certificate of eligibility form whether or not you can get the 100% financing. But it's like, in 20 years I've been doing this, I've never seen someone provide a certificate of eligibility where they weren't able to get that 100% loan. So, you know, there's that. And then it's, you know, it's now some other things about the VA loan is, so again, it's 100% loan. It doesn't have mortgage insurance. So it's like, it's just basically your principal and interest, your property taxes and insurance. Now the VA does have a funding fee, and what they, you know, that they tack into your loan amount. And so like, say, for example, if you have a $100,000 loan amount, the VA is going to tack a funding fee in there. Well, if the veteran has a disability, the Veterans Association waives that funding fee. So, you know, so there's it's for the veteran, or it's for the active military person, or the person that is active, or, you know, a veteran. And if they have a disability, they waive that funding fee. So they really, really, you know, go above and beyond to those that have served our country, which is an awesome thing.
So Jim, I have another question, because I know that Augusta is a hot spot for VA because we have military installation there. So where can a veteran or somebody who served, where can they go to apply for their certificate of eligibility? And then how do they know if they're actually out, if they got honorably discharged from the military? How can they find out what their percentage of disability is to find out whether that funding fee will be waived? So that's two questions.
Well, sure. Well, you're asking all these trick questions here, Deirdre. Thank you. Put me on the spot. But well, they can. I mean, actually, I believe Augusta has a VA center, or they can actually go online, and then the the Veterans Administration online, they actually have a pretty good help desk for stuff like that. But typically, they could actually go to the local VA center, and they could probably get that certificate in a matter of an hour. But it's, I don't know if I'm answering your question properly, but it's just that they've made it a lot easier to get this taken care of. Whereas before in the past, it's like, hey, if you didn't have what's called your DD 214 and your certificate of eligibility, and we'd say, oh, we'll get those things first. Whereas now it's like, you can get that stuff either online or in the same day. And certainly in the Augusta area, you've got access to go to a VA center to get that document. And it'll show on that document what you're eligible for.
Awesome. Okay. And the reason that I ask those questions, because I used to be in your business, and you're better than me, my friend. So I had to give it to you. And I think it's important that if you served in the military, if you believe you're eligible for a VA loan, make sure you do your homework now, so that when you show up at Jim's door or you show up to talk to Alicia, you've got those papers in hand, or at least they're coming. Because I worked with a lot of people that didn't do that work ahead of time. They were doing it while they were in the process, and it created some angst for them. So let's get back. We've got questions. You guys are stirring it up out there, Jim and Alicia. So Miss Andriana, I hope I pronounced your name right, Miss Robinson. And Miss Andriana Robinson has a question for you, Mr. Dante. For the Community Partners project or product, I know if I had a list of essential workers like police officers or nurses, but what about social workers, specifically individuals in the Head Start program? We honor you, my sister, for taking care of our babies in Head Start. Mr. Dante, what about that?
Sure, that's a great question. So typically, yes. So we look at whether or not you're employed by, we look at who your employer is. So if you're employed by the police department, fire department. So in your case with Head Start, that for us would be considered an educational institution. So any employee of an educational institution such as Head Start would be eligible. So that's a great question. Thank you for asking that.
So Miss Andriana, we expect you to call Miss Alicia like tonight. Okay. Thank you for that.
Yes.
And we have one more, and then we're going to go back to the poll questions. You guys have amazing questions. Thank you so much for participating. So Miss Iris McNeil wants to know, what's the typical time span for closing after putting in the initial application, Mr. Jim?
Okay, if it's a purchase transaction, you're looking at typically about 30 days from 45 days to get a loan closed in this environment. And it's been a pretty active environment, to say the least. So pretty much, if you're in the mortgage industry, you're pretty much busy. But that's why it's important to kind of get that pre-qualification ahead of time. So it's like we're reviewing your income docs, we're reviewing the asset docs, or in the case of the assets, it's a down payment from First Home Loan Bank. We know where the down payment's coming from, because the more organized you're up front, the more seamless your closing is going to be. Because I can just tell you, as a first-time home buyer, again, you're going to be a little bit like the deer in the headlight. And it's like, before you know it, that day is going to get here. And it's like, just be organized, and you're going to close on time or before your closing date if you want to close sooner.
Awesome. We got another question from Miss Tiara. She says, how do you, as a credit union, how do you assist county, so Richmond County employees or Burke County employees, with home buyer assistance? And I think that's probably going to be a Shadante question.
Sure. So in that case, again, it depends on what your role is with the county. So that's what I would encourage. If you want to reach out to me, or if you want to reach out to someone at Peach State Federal Credit Union or Member First to sort of talk through the particulars on that. But again, it will depend on what your role is with the county. So in instance, going back to the example we talked about earlier, if you're a social worker, for instance, with Richmond County, you could potentially qualify. But again, it really just depends on what your role is. So we would have to dig into that a little bit more to confirm your eligibility.
So Tiara is a teacher. So I think you all spoke about teacher opportunities?
Yes, absolutely. So if you work as a teacher for Richmond County Schools, then absolutely. So that would be an eligible population for the down payment assistance. So again, as long as you work for an educational institution, so in this case, the county school system would certainly qualify.
So what if you are working the clerical office for the county?
Great
You would
question.
qualify?
So if you work in the clerical office for the county, but you still work in the school, for instance, then you would qualify. Or
All
if you
right.
work in the clerical office and maybe you work for the police department or fire department or something like that, you would qualify. But again, it's really driven by kind of what area of the county you're employed with.
Okay, great. Thank you, Shadante.
Sure.
Awesome. Thank you. So now we're going to go back to some poll questions. Keep those questions coming. So question number 4, do you understand the benefits of working with a loan officer versus just applying online? You all get to see Jim's face right here. You get to talk to Miss Alicia. So why would you want to do it online and not have the benefit of hearing Mr. Jim's jokes and having him walk you through the process? And why would you not want to see Miss Alicia's beautiful face? Let me tell you something. This young lady is a leader to be led, and she's a leader that's leading down there in Augusta. So do you understand the difference between working with somebody face to face in social distancing versus being online? What's the difference? Jim, can you talk a little bit about that? So, you know, what's the typical customer experience online? Do they get to establish a relationship with a loan officer?
Well, that's a true question. I would say really no. And again, I think both technology is good to use, and actually working with a local loan officer is a good thing as well too. Because I think a lot of times, I'm not saying it's overly complicated to get a loan, but it's like, you know, I think we see all these TV ads by certain companies that say, you know, press button, get mortgage. And although getting a mortgage is a little bit of a math equation, it's either going to work or it's not going to work. And we should, as loan officers, know if it's going to work it up front. Again, it kind of goes back to the scenario where, you know, I know Peach State and the loan officers that they have, they are going to spend time with their members during business hours, after business hours. And, you know, it's important to establish that relationship or rapport with the loan officer, because you're going to be relying on that person when you need the pre-approval letters, when you're out shopping with the realtor, and sometimes it might be on the weekend. And I can certainly tell you that, it's great to have the technology to make an application and all that. But it's like, it's also great to work with someone that's local, that's going to answer or return your phone call within a couple of hours. And so although online technology is great to help you get pre-approved, it's not the be all end all. And again, another reason why you'd want to use an online loan application is, you know, a lot of the documentation that we request is actually sensitive, and that it's, you know, it has personal information. So, you know, one of the benefits of having an online application is like, okay, talk to your loan officer, but then you can actually upload those documents securely instead of sending it via email, which is not secure. So, you know, it's kind of, there's not a right answer or wrong answer. It's you know, work with the local loan officer that uses technology, not just press button, get mortgage, because that's not the truth.
Right. So you get the best of both worlds working with both Peach State and Member First Mortgage.
Yes.
Yeah.
Alicia, can you please do us a favor and put your contact information in the chat section? We don't want anybody to walk away tonight not knowing how they need to get in contact with you. So we need everybody to look in the chat section.
Yes.
And Miss is going to put her information in there. It's exactly where you guys are putting your, well, actually in the chat section, the public chat section. Thank you, Miss Alicia. So we have another question. How complicated is it to refinance my existing mortgage with Peach State Federal Credit Union?
Well, I'll chime in on that. Press button and apply. No, just kidding. Yeah, you can certainly reach out to the local, you know, to the loan officer of Peach State, or you know, you can contact, you know, us as well too, and that's fine. It's not overly complicated. Just, you know, it's actually a very good time to refinance. You know, this pandemic, you know, has kind of put things, you know, in a quandary as far as like, it's really kept the rates down pretty darn low. And so for people that have like excellent credit, you know, with like 740 scores and stuff like that, it's very common to get an interest rate on refinance on a 30-year fix around 3.25. So, what I would say is if you're thinking about refinancing, start gathering some of the documents that the loan officer is going to need, like your 2 pay stubs, maybe a W-2, a copy of your mortgage statement, a copy of your homeowner's insurance policy, so that if what the loan officer tells you like, you're ready to go and pull the trigger, and then before you know it, you can close within 30 to 60 days. I would say in the volume that we're in right now, it might take up to 60 days for a refinance. But again, the more prepared you are up front, the better off you're going to be. And then, a lot of people right now, they're actually refinancing because the rates are so low, and they're actually saying, hey, I had this 30-year fix. I've been paying on it for 5 years already. And it's like, well, you don't have to start with a fresh new 30-year fix. You can start with, like, say, a 20-year fix, or you can go to a 15-year fix, so you can shorten your term. And because the interest rates are so low, some people are actually keeping the payment the same, even though they're shortening the term. And then another reason why someone might refinance is like, hey, I've got lots of equity in this home, and I was thinking about actually, making some upgrades to the home, and you can certainly do that. And that would be another good reason to refinance, where maybe you want to upgrade some of the things in your home. So, or they certainly can get a wonderful, fabulous home equity line of credit at Peach State if they didn't want to refinance their first mortgage, and they have a phenomenal rate.
And you can check out in the handout section our flyer on HELOC.
Awesome.
Yes.
So I have another question, because we're talking to a credit union tonight. So can you talk to us about the difference between doing business with a credit union and the dreaded bank and that intangible tax? Isn't there some cost savings in there somewhere?
I'm glad you brought that up, Deirdre. Okay, so my company, Member First, is a mortgage company that is owned by credit unions. Credit unions are actually nonprofits. And, right now, for people that are getting conventional loans, whether it's a purchase or refinance, they don't actually have to pay the intangible taxes because the credit unions are a tax-exempt nonprofit status. So, like, say, for example, if you're a member, which is another great reason to become a member, if you had a $100,000 loan, one of the benefits that you could see is you don't have to, the state of Georgia does not get to collect that $3 per thousand that you borrowed, which is intangible taxes. So there's those savings as well too on conventional loans, and sometimes on VA loans as well too when it closes in the credit union's name. So, I mean, this is not a mortgage related thing, but I was kind of shown the light of credit unions about 8-9 years or so ago, and so I've been banking with credit unions now for 8 or 9 years. And one of the nice things about a credit union is that you're actually a shareholder and you're an owner of that credit union. They actually will pay you a dividend. And for me, it's kind of frustrating sometimes when I'm being in the mortgage business, because we're looking at people's financial statements all the time. And I'm looking at these financial statements from some of the big banks. I'm like thinking, oh my God, I can't believe how much this big bank charged their customer. And whereas like with Peach State, not only would they charge less for that, but they're actually going to pay you more on your checking and savings. And so they've got all the online advantages that any of your big banks have. And I just, Peach State is a great credit union. It's a great place to save money. And it's even a better place to have your direct deposit versus going to that big bank. I mean, you'll earn more money and there's less fees. That's not mortgage related, but that's the big thing I learned by joining a credit union about 9 years ago. So I'll zip it.
That's awesome. Good stuff.
If you're going to say that, keep talking.
So we have another question from Miss Iris McNeil. These are great questions. I think this is going to be a Jim and a Shadante question. So she says, I am a school system employee and my husband is an officer. Should we do a joint application? Would we both receive down payment assistance if we do the joint loan? Excellent question.
That is a great question. So for us, we are only able to do one down payment assistance per household. So thank you to both you and your husband for being eligible and for what you do. But for these purposes, for down payment assistance, again, because the funds are limited, so it's one per household. So unfortunately, you wouldn't be able to apply for the money for both of you, but definitely sounds like you would certainly be eligible for that $7,500, assuming you also meet the household income requirements.
Awesome.
Tim, anything you want to add to that?
Yeah, certainly I would add something to that as well too. Again, kind of like one of the first poll questions, or maybe the second one, was regarding credit, and so I kind of talked a little bit about that. A lot of times it might be beneficial from a qualification standpoint if you qualify with just one person on the loan, and say, for example, if it's a conventional loan, you can always put the other person on the deed so that, if something happens to that person, that, the property goes to the other person. And sometimes the reason to do that is like, hey, if you have enough qualifying income and then the second co-borrower or the co-borrower doesn't have a credit profile that is as good, but they still qualify, it's better to do it with just one borrower, because then you have a loan that's going to be priced better, because the way mortgages work is they get priced on the middle score of the 3 scores. And if you have 2 borrowers, one has a 730 score, for a mid score, and then the second borrower has a 680 score for their mid score, that mortgage is going to get priced with the lower of the mid score of those 2 borrowers. And again, if the person qualifies with just, has enough income on the 730 score, I would recommend that they leave that person off the loan, but put them on title.
Okay.
So
very good.
Okay.
So let's go back to some poll questions, because you guys you're doing a phenomenal job. So here we go. Question number 5. Have you ever purchased a home with the help of a realtor? And Jim, you talked a lot about realtor. You talked about the listing agent and the selling agent. So tell us why, when I go looking for a home and I see the sign in the front yard and I immediately call that person, did I do the right thing because I called the person on the sign, or should I have my own representation?
Well, I really think you should have your own representation, because, again, in this whole transaction, it doesn't matter how good of a negotiator you think that you are. What you're doing is you're leaving plenty of wiggle room for that realtor to make extra commissions. Because typically on a real estate transaction, if you have a $100,000 sales price, if you have a buyer's agent, they're going to get 3%, and then the selling agent's going to get 3%. So there's a total of 6% commission on that deal. And so you would think, well, hey, if I represent myself, I am going to be able to save that 3%. It doesn't work that way. They won't share it with you. And then when it comes to the point of actually writing the contract, who's going to help you to write that contract? I mean, it's like there's lots of protections in that contract. If you have a buyer's agent, there's a due diligence period, which means, hey, I'm under contract now, and I've got maybe 10 days to get a home inspection to see if there's anything structurally wrong with the home, or see if there's anything wrong with the plumbing, the HVAC system, stuff like that. And it's a little bit more complicated than people think, and you should always have someone, in my opinion, representing your interests, because the listing agent is not going to protect your interests. They are probably going to try to keep that extra commission, and they're not going to write anything in that contract to help you protect yourself, which is the due diligence period, financing contingency periods, and appraisal contingency periods. So I strongly advise against that, because in the long run, you don't save any money.
Now talk to everybody about how do they go about shopping for their own real estate agent. So, if I know, that's why this process requires some thoughtfulness, right? So I don't just wake up in the middle of the night and go, oop, I'm going to buy a house. So it's a process. So how do I go about recruiting, and what are the top 3 questions I would ask a realtor that I want to work with me?
For me, it's kind of straightforward. I mean, the most important thing is this realtor 100% committed to their job? Is this their full-time job? That's the most important thing, because in the realty world, probably 10% of the realtor population account for 90% of the sales. And so, it'd be like, okay, so this is a full-time job for me doing what I do, which I spend 40 to 50 hours a week. And it's like, well, hey, I could get myself a realtor's broker's license on the side and do a couple of transactions a year. But it's like, it's a full-time job, and it's not for the meek of heart to write a contract, and it is a full-time job, because if you go with somebody that's part-time, it's a very, very competitive market out there. And so the second thing I'd probably look for is you should be able to find sources that will show you, I would say, try to get with the top producers, for that particular area that know those neighborhoods. Because the other thing that happens as well too, when you get your better agent representing you, say if they have multiple offers on the property, the better agents know each other, and so when they see an offer from Realtor A, who is the known entity in that neighborhood, and she's representing that buyer, even though there might be multiple offers, and that offer might not be the highest one, that listing agent might actually just accept the offer because they know the reputation of that realtor. Where if it's someone that you found on Zillow or whatever to sign up with an agent, you don't know what you're getting into, and you don't know if it's really a full-time agent. Whereas it's pretty, to me, find out who's the best agent for that area. Now, a lot of times they are going to have preferred preferred mortgage companies, but this is where you need to stick to your guns, because Peach State's going to give you a better deal. They're going to save you on intangible taxes, and they're going to be able to close on time, and they're your credit union. So, a couple things about realtors. I'm trying to think if there's anything I can add to that, Deirdre. That's my 2 cents worth.
Okay. I think that's really important. And just know that you all have a resource here, because you can reach out to Alicia and Jim, and they can definitely help you with that. And we're going to make sure when we come back, before we leave, we make sure you have everybody's contact information, most especially Alicia's and Scott, because he's the local person. But we've got some more amazing questions. This is exciting. So Ms. Boyd says, can you get down payment assistance from FHLB and through the city's down payment assistance program if you meet income requirements? Because the city of Augusta has got some pretty awesome incentives from a down payment assistance. So the way we say that in the industry, can you layer down payment assistance, Jim and Shadante?
And I'll answer that from a Federal Home Loan Bank perspective. And absolutely, you can layer funds. So you can get funds from the Federal Home Loan Bank. You can get funds from the city or the county. And so basically our funds, we always say we play well with others per se. So yes, you can absolutely get funds from us and get funds from other sources of down payment assistance. And from our perspective, that's a benefit to you as a borrower, because that's less money that you're having to pay back, less money you're having to pay out of pocket. And you're going into that property with additional equity. So we see that as a win-win. So absolutely.
Awesome. Jim, will you all allow a borrower to layer down payment assistance?
For certain programs, yes. So for example, like an FHA will allow that. One conventional program does allow it, the other does not. So, but again, it's FHA typically does. Because I've had that happen before, so that's not an issue. But on some of your conventional programs, some of them do, some of them don't. And then, again, just, find out what the down payment assistance is, and then check with your local loan officer, and they'll determine and confirm with underwriting if it's acceptable, but definitely for FHA.
Okay, so that's important. So Ms. Tierra, make sure that, because if I'm not mistaken, I think most of the properties that are being sold, and I don't know this to be true, but the few loans that I know were closed down in the revitalization area, most of those were they were FHA, Federal Housing Administration loans. So just double check the mortgage products, again, with your loan officer, and Elisa can help you with that. We have another question. Jim, this is one of my favorites. How is student loan debt calculated in your debt to income qualifying ratios?
You know what? It's like, golly, I mean, I feel bad because I didn't think about putting that as a poll question, but that's a great one. So there have been a lot of changes in that over the years, and for FHA, which is kind of like your typical first-time home buyer product, but not the only one. It doesn't matter whether it's deferred or not. We have to count, like, say, for example, if it's got a $23,000 balance, we have to take 1% of that outstanding balance and count it against your debt-to-income ratio. And on conventional loan products, it differs between Fannie Mae and Freddie Mac. We are both. Fannie Mae says, hey, we can accept what's showing on the credit report, and we're fine. Same thing with Freddie Mac. If there isn't a payment showing up on the credit report for that student loan, Fannie Mae has us count 1% of the outstanding balance, and Freddie Mac only has us count half of 1% of that outstanding balance. So regardless of whether they're in deferment or not, you're still going to have to pay something. And then if you might have gotten into an agreement where you've consolidated some of those student loans and then you've got an amortized payment, we can accept that amortized payment, but you have to provide us a document that shows what that amortized payment will be. And then we can use that to calculate, our debt to income ratio. So that's an excellent question. I appreciate that.
So that's critically important. So, when you talk about those payments, they need to know all of that before they come sit down or talk to you all. Know exactly what the qualification is going to be. So here comes Miss McNeil. Miss Iris McNeil says, so part 2 of my question, these are great questions. And she says, LOL, ha ha ha. No, she says, sounds like on one of us, she says, between she and her husband, she says, it sounds like one of us should be on the application, but what if one of our credit scores qualifies, but the other person's income qualifies? Who should we put on the loan application?
Well, in that situation, if it takes both loan applicants for qualifying income, then they both need to be on it. However, this is one of these situations where it's like, if you can maybe get with Alicia and let's try to take a look at your credit and see what's going on with it. Maybe we can kind of offer some guidance as to what it might take to get that credit score up for the other borrower. And because if you need the qualifying income of both, there's not much you can do about it. And if it qualifies for a program, that's great. But is it worthwhile maybe to wait to get that credit score up where you can maybe get the better price mortgage? So.
Excellent. And it looks like, keep the questions coming now. We're not tired yet. Jim is just getting started, and so's Alicia. So what other questions do you all have? Because we have exhausted our poll questions. There's a couple of other things. I know that we want to make sure that you all have Miss Alicia's contact information and Scott's contact information, because Scott is the actual local loan officer at Peach State. And Miss Alicia, if you could put that back up, and I don't know if it's possible for us. We've got an amazing young man, Jalen Robinson, who is running things. He's driving the boat on the backside of this webinar, and I don't know if we can get the last page of our Prezi presentation up, Jalen, so that everybody has all the contact information, most especially Miss Alicia and Scott Palmer, because we want to make sure you all do not have to look to find the individuals that you need, because it sounds like some of you are literally thinking through what you're going to be doing in the next couple of days as it relates to purchasing a home. So that's exciting stuff. And also, I know that Jalen put the Prezi, so the presentation that was so beautifully done by Joseph, Jalen actually put that in the landing page. So you all are going to be able to revisit this webinar. You can come back into this space, and I'm certain that within a few weeks, we're going to have this particular presentation maybe on Peach State's webpage as well. So you're going to be able to revisit this and get all of this good information. You all have had amazing questions, and Jim, it's such an honor to have you and Shadante here, because it's not often that you can sit with someone who does this on a day-to-day basis and really ask them those questions that you ordinarily think about, but you don't have anybody to pick up the phone and ask. So we appreciate you for being friend in the space. And Mr. Jalen said that he is working to get the Prezi back up so that you all can get your contact information from here. But in the meantime, what you can do is you can come back into this space and go onto the landing page, because he has actually put the presentation, the Prezi presentation that we saw, he's actually embedded that into the landing page of this particular webinar.
And I am placing Scott Palmer's information inside of the chat box as well. Again, he is Peach State's mortgage guy, so you can also view his direct contact information. And there it goes. Jalen has pulled it up for us. He has everybody's contact information. Mr. Dymack, Miss Shadante Butler, myself, Alicia Fitz, Miss Deirdre Cox, and Scott Palmer, Manager of Mortgage Services. So, anyone else have anything else they would like to add on tonight? I don't see any more questions.
Somebody did. There was Miss Alicia. There was another question. Somebody asked about. They asked you and I if we would talk about the properties in the revitalization zone, and I'm looking for that question because I saw it. They talked about the benefits of buying a property in a revitalization zone. So I can't speak because I don't live in Augusta, but I can talk about, because I'm a community and economic development practitioner, and I can talk a little bit about what happens with property values when you purchase in a revitalization zone. So oftentimes, especially here in the city of Atlanta, because I live in Atlanta, there's been some tax abatement. So people that are purchasing on the west side of the city, there's been some dollars put into pools to keep property taxes down, because in a lot of these areas, they want to keep the indigenous folk, the folks that have lived there. They want to be able to keep the legacy residents there. And typically when you move into an area and property values are continuing to go up, 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 here's the mathematical equation. When property values are going up, typically taxes go up, right? So typically in those revitalization zones, they may have a cap or a ceiling on the taxes. So the taxes can't go up that much. And then typically in these areas, because there's a lot of down payment assistance, I do know that you all have a wealth of down payment assistance in Augusta, as do we here in Atlanta, but you have to stay in the house. There's something called an affordability period. So you cannot move or sell your property and gain and reap the rewards of any equity that you've received, typically for 5 years. But Jim, can you talk a little bit about that? And Shadante, can you talk about the affordability period on your mortgage products as well?
Well, yeah, as far as the affordability, it's like we pretty much are going to accept pretty much any kind of down payment assistance that's out there, with the Federal Home Loan Bank. So that's not an issue. Shadante, I'll let you kind of chime in there as well too. But it's like, hey, we're okay with it. I mean, it is allowed by FHA. It is allowed by some of your Fannie Mae community-based products. So,
sure. And so for the Federal Home Loan Bank products, we actually have a 5-year affordability, or what we call forgiveness period, for our products as well. So what that means is if you stay in the property for 5 years, that $5,000 or $7,500, that gets forgiven. Now, what happens if you have to move out before then? It depends on whether or not you're making money when you sell your property. So for us, if you are making money when you sell the property, meaning you're getting a gain back from the property, we'll collect a prorated amount. But if you don't make anything when you sell your property, you don't have to repay anything. So again, that's where having that relationship with the loan officer can be helpful for you to figure that out if you were to sell the property within the 5 years. But if you stay in that home again for 5 years, it's completely forgiven. After that, you can sell, you can make a gain, and there are no repayment obligations for Federal Home Loan Bank.
And I think one other thing and Shadante has seen this a lot just because of what she does. And I'm sorry, did I go away? Oh, there we go. Because she's in the affordable housing space as well. Typically in areas that are being revitalized, property values are increasing quite rapidly. And again, that's part of the reason that there's that affordability period, right? One of the things that you can truly benefit from is equity. So staying in those communities, I've seen some really sweet communities be formed in areas that have been revitalized. You get a core group of people that are moving into a community. They raise their children there. The schools are leveling up and they're growing at the same pace. So it's a wonderful place to sit back and watch the equity. I heard what properties were selling for when they first started selling down in your area, in the Laney Walker area. And property values have done nothing but go up consistently. So, I think that it's a great opportunity. You want to definitely find out from the folks at the city, what are the benefits and what is the affordability period, because you don't want to move into a home and think you're going to move out within 2 years, but the affordability period is 5 or 10 or 15 years. So those are just some things that we would suggest that you look into. And I see that Miss Alicia Fitz has put Mr. Palmer's contact information here in the public chat section. So please screenshot that, take a picture of it with your phone, make sure you've got all the information and the contact names that you need. There's a couple of other amazing people that we want to shout out tonight that are not, their faces are not physically here with us. Mr. Ed Presnell, whom I affectionately refer to as the mayor of Augusta. We miss you, Ed, and we're glad you're on here with us tonight. And Ryan Hawk. Ryan Hawk is the executive director for Community and Economic Development with Peach State Credit Union. He was my ticket to the Peach State Dance, and for that, I'm eternally grateful. And again, we want to thank you all for being here with us tonight. And I'm going to turn it back over to Alicia because she is the hostess with the mostest. The only reason I talk so much is because she couldn't see the chat room and all these great questions you all asked. But I'm going to turn it back over to our hostess with the mostest. And thank you all for being here with us tonight.
I just want to thank everyone, for all of our attendees, for watching on tonight, for your wonderful questions. I want to thank our presenters, Mr. Jim Dymack and Shadante Butler. You did an excellent, phenomenal job answering questions. Your presentations was wonderful. Thank you, Deirdre Cox. You know you are the bomb. We appreciate you. President and founder of CSE, Community Sustainability Enterprises. And again, my best friend, my colleague, Ed Presnell. He couldn't be here with us on tonight on video, but he is here representing, and we appreciate all that you do for us in Augusta, everything that you've done with this webinar, helping it to become a success. Also, Jalen, thank you, Jalen, for your IT expertise. You did a wonderful job, and he has, we just thank you so much. And also Joe with Member First Mortgage, the marketing giant. He crafted this presentation, and it was wonderful. And we want to thank Ryan Hawk, the brains, for connecting all of us and pushing us. He's my executive director for Peach State Federal Credit Union, and he gives us the extra push and to do the things that we do. He wants to see us succeed with helping our members. We care about our members. We care about our potential members, and we thank you all for joining. So I want to say thanks for coming into our house and for welcoming us into your house. And please find our contact information on the screen or in the chat box. And until next time, I'd like to wish everyone a good night.
Good night, everybody.
Good night.